Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 29th of September. Almost got my days mixed up. Now, let's just have a look at what's going on. Treasury yields through the roof, right? If you're not preparing for the Federal Reserve to start tapering their asset purchases, right, a stronger dollar, well, you're missing the picture, right? The movement here in the Treasury yields extremely aggressive, convincing, and the flow-on effect is pure. Higher yields, lower equity markets. What they should really point towards is a stronger dollar across the board and a weaker dollar block. Now, there's a few things happening. The dollar is starting to kick in, and you can see the dollar index I've got on the chart down here. It is edging higher, but it's not as dramatic a move as what we are seeing on the US Treasury yields, but that will probably catch up at some point. Be watching the markets very closely in North America today to see if the Treasury yields continue to rally. And that should see the equity markets fall. That gives you the confidence to get into a long dollar trade. Now, there's a couple of other things going on too. There's that oil crisis I've been talking about probably for the last 36 hours. That has really come in and belted sterling down 150 odd points, right? The whole shortage of oil, unrest. I think they were saying the army was going to be on standby to sort of help out if need be. But that'll slow down economic growth, creates unrest, obviously a big kick in the belly as far as business consumer confidence goes. So that's a legitimate move on sterling on this shortage of oil. It looks like Aussie and Kiwi have just joined them in for the ride, whereas Euro is just nicely trending down, right? As I said, if anything, I'm surprised the Euro isn't at least another 50 points lower with that move in the treasuries. But you know what? All things being equal, it's going in the right way, right? You're starting to see a little bit of an upside move there in dollar Swiss. Dollar yen, I've overlaid the US 10 years treasury bonds on that. You can see how closely dollar yen is trending with the US treasury. So if you're looking for a trade on dollar yen, the US bonds will give you the answer as to whether this thing keeps going up or down. We've got a bit of a correction here in oil. It's enough to push dollar CAD back above that resistance line, right? We've got a strong dollar, so you'd think the dollar would continue higher. If oil continues to fall, well, we're going to see dollar CAD sort of slowly squeeze to the top side there as well. So quite a few opportunities building. Don't forget, we are in that fourth week of the month, right, where there's less major economic releases, right? And we do have a huge basket of central bankers talking this week, right? There's from across the US, Europe, pretty much everywhere. They're all coming out, and it's very not too dissimilar to every other month. The last week of the month, there's less economic numbers. There's usually more central bankers talking, and that's what we've got. So just keep an eye on those things. They are like a left field event. Primarily, what you're looking for is the heads of the central banks. They will be the biggest impact. And I can't see them changing any sort of focus at this point. And otherwise, the sort of writings on the wall. We've got dollar direction. As I said, it's not exactly as aggressive as the move on the treasuries, but the dollar's going up, the treasury yield's up, equity's coming off, and the dollar is starting to move higher across the board, and the dollar block, they are moving down. That's the way of it. I can't see it changing for the next day or so. You'd expect profit taking before the weekend, but that's a good 48 hours away at least. All right, guys, that's it from me. Keep an eye on obviously the cross-market interaction. You're going to be preparing for a strong dollar. Like Friday week's non-farm payrolls will be the crunch for the dollar. Up until then, I'd expect the dollar to rally as we head towards that event. All right, guys, that's it from me. Have a good one. Cheerio.